Iraqi Dinar Hub returns with another major update on the shifting financial dynamics of the Middle East. The developments emerging over the past 24 hours deserve your full attention, as they are being described by multiple observers as nothing short of remarkable. For years, the Iraqi dinar has remained at the center of speculation and long-term anticipation, with a global community patiently tracking every movement. What many believed could one day become a pivotal turning point appears to be transitioning from mere possibility into an unfolding reality. Recent reports are flowing in from well-connected international banking contacts, seasoned market strategists, and high-level financial analysts. These updates all converge on one extremely significant claim. Contract rates for the Iraqi dinar are beginning to appear inside major global banking systems. This is not just another rumor to casually dismiss. Instead, many are viewing it as a concrete and significant signal that investors have been watching for, one suggesting that the long-discussed revaluation process may finally be entering its activation stage. Our in-depth coverage today is fully dedicated to exploring this extraordinary situation, breaking down the importance of the timing, evaluating expert commentary, and analyzing the broader global financial implications. We begin with the event many insiders are labeling the 7 o'clock p.m. shock, according to reports. Just before 7 o'clock p.m. local time yesterday, several major financial networks began receiving newly updated data strings tied directly to the Central Bank of Iraq. Typically, such updates happen quietly, as part of routine overnight system maintenance. However, this particular update was immediately flagged as highly irregular. Experienced insiders took note because these updates reportedly contained specific rate adjustment entries, the kind of internal data normally seen only in moments of major currency recalibration or substantial policy shifts. Within minutes of the initial alerts, corresponding information began surfacing from US, European, and Middle Eastern banking channels. All of these systems were reportedly displaying live contract rates for the Iraqi dinar on their internal trading platforms. This type of synchronized appearance has not been witnessed in years. And historically, it has served as an early indicator that a substantial global currency event may be approaching. Understanding why this occurred precisely around 7 o'clock p.m. is essential in grasping the level of coordination behind this move. The span between 7 o'clock p.m. and 11 o'clock p.m. Eastern Time represents one of the most sensitive and strategically important windows in international finance. During these hours, global banking systems conduct critical synchronization cycles, refresh their overnight data, and align rate tables across all major networks. Banks worldwide recalibrate their figures with central banks, SWIFT channels, and international foreign exchange platforms. If Iraq's objective is to introduce a new currency value in an orderly, controlled fashion, avoiding panic or sudden market imbalances, this nighttime synchronization period would be the ideal time to initiate such a transition. Implementing adjustments during this window allows the Central Bank of Iraq to validate stability across all systems before normal trading resumes. According to analysts, the timing aligns perfectly with Iraq's recently completed budget adjustments and system testing exercises, suggesting the activation of these contract rates was deliberate, calculated, and far from accidental. To avoid confusion, it is important to clearly define what contract rates represent, as this concept is often misunderstood by the general audience. In essence, a contract rate is a predetermined exchange value reserved for a specific group of authorized organizations or verified individuals who meet particular qualifications for early exchange access. These rates differ from the eventual public rate and are typically higher, intended for selected tiers such as government entities, established humanitarian operations, and verified private holders. These holders are usually categorized into structured groups, including Tier 1, Tier 2, and Tier 3. Following those groups is Tier 4, commonly described as early private participants and registered individual holders. It's often subdivided into Tier 4A and Tier 4B. When these internal contract rates become visible across international banking platforms, it is historically recognized as one of the final internal steps before the public rate is formally released. This recent appearance of contract rates is therefore generating intense excitement among dinar watchers. After months of searching for tangible confirmation, this development is seen as a strong and undeniable signal. It suggests that Iraq's revaluation process is moving from theory into real operational status within global systems. This progression may well mark the beginning of what many experts refer to as the final rollout, the activation phase of Iraq's new financial era. If this interpretation is accurate, then the long-anticipated dinar revaluation, or RV, could be significantly closer to public reveal than most observers predicted. These internal banking movements are further supported by notable domestic developments inside Iraq itself, adding weight to the international financial reports. Local Iraqi media in Baghdad have aired broadcasts confirming that the nation's currency reform program has reached its final stage. Senior officials from Iraq's Ministry of Finance have publicly reiterated the government's objective of restoring the dinar's true strength and global credibility. This same message, emphasizing the restoration of trust and value, has been repeatedly highlighted by both the Prime Minister and the central bank governor in recent public remarks. Meanwhile, tangible preparations are taking place nationwide, including the distribution of new lower-denomination notes to targeted regions and the recalibration of ATM systems to support both old and newly issued currency. These coordinated actions are far from minor adjustments. They represent a full-scale national effort to prepare Iraq's monetary system for international alignment. At the same time, Iraq has been aggressively advancing its long-term strategy of reducing reliance on the US dollar. In recent months, the government has enforced strict policies requiring most domestic contracts, public sector payments, and internal trade transactions to be conducted in dinar rather than dollars. This de-dollarization push has even extended into key international dealings, including oil payments with regional partners now being settled more frequently in dinar. This strategic initiative is a foundational part of Iraq's broader plan to reclaim full monetary sovereignty. Whether domestically or internationally, the message from Baghdad is clear. The dinar, not the dollar, is intended to become the central pillar of the country's financial infrastructure once again. When this internal reform strategy is viewed alongside the precisely timed international banking updates, it becomes increasingly clear that these developments are not spontaneous. Instead, they appear to be part of a coordinated and well-constructed long-term plan, carefully moving toward culmination, adding further depth to the unfolding situation. Multiple international banking insiders are reporting that internal exchange screens are now displaying active placeholder entries not only for the Iraqi dinar, but also for the Vietnamese dong. The presence of placeholders alone is no surprise, as they often exist in a static, non-trading form. However, what makes the current situation unusually significant is that these placeholders are now showing slight fluctuations, a strong technical indicator that they are connected to live market feeds. This suggests that new values may already be integrated into the global financial network behind the scenes, even though the public rate has not yet been released. This level of activity typically signifies that a currency is moving through the final testing or pre-activation stages. Historically, once currencies reach this phase, the next steps tend to follow a predictable sequence. First, international banks confirm rate stability within their internal systems. Next, the central bank or government issues an official public announcement. Following this, exchange locations receive formal appointment procedures, beginning with top-tier groups and gradually expanding to the general public. Finally, foreign exchange platforms update their public rates, marking the official global launch. According to many analysts, Iraq appears to be positioned squarely within the quiet transition window between internal activation and public disclosure. Unconfirmed but widely discussed reports suggest that several major U.S. banks, including institutions such as Chase and Wells Fargo, are maintaining elevated alert status, monitoring rate activity in real time, and preparing for potential customer notifications. At the same time, various redemption centers are said to be testing secure communication systems and validating appointment protocols. This level of coordinated readiness across banking and processing facilities is frequently associated with a pre-launch environment. The biggest question on everyone's mind now is when the public announcement will be made. The timing is entirely at the discretion of the Iraqi government and its central bank. Historical patterns for similar rate activations vary widely, in some cases becoming public within 24 to 48 hours, while in others requiring several days to ensure full stability. The common agreement among experts, however, is that the system is actively moving. Once internal rates stabilize, an official public release is expected to follow shortly afterward,